With just days to go until the Federal Reserve's closely watched September meeting, how can investors navigate these volatile markets? I'm joined now by David Nelson, Chief Strategist at Belpointe Asset Management. Hi, David. It's great to have you here.
Great to be back.
All right. So what should investors be doing with their portfolios now? I mean, is this kind of a wait-and-see type of environment as the Fed mulls a rate hike this week?
You know, I think a lot of investors, what their concern is this a correction? We've had a correction. Could it morph into something more serious, perhaps a bear market? I'm on the other side of that debate. I don't think that's going to happen. I think we have a myopic focus with the Fed, and we're so concerned that they're going to raise 25 basis points. And right now, nobody on Wall Street really knows. I've come out in the past and said that it was going to be this month, but if you look at the dots, nobody's really sure. So maybe it'll be later in the year, but does it really make a difference whether it's September, October, or December? It's coming at some point. There are some calling for no Fed hike all the way into 2016. I don't see how you can justify that.
But is the Fed's rate hike, whenever it is that what is needed to calm these markets down?
That's not going to do it on its own. It's certainly not just the Fed. There's really four things that investors are dealing with. One is certainly valuation. We've had China to deal with. That's been a big problem for U.S. multinationals. The strong dollar. It's on every conference call. And also oil. You know, the concept that oil keeps plummeting down. Why is it going down? Is it just supply, or is there something more ominous out there? You put all that together and you get investor angst. I'm pretty constructive right now, so far. And let's see how it pans out the next couple of days. We're getting a successful test of the lows right now.
But even once the Fed lifts for the first time, I mean, then investors are going to be worried about the second and third rate hikes.
I think they've made it pretty clear they're going to probably stand pat for a while. And frankly, if they do raise rates, it's probably good news. It probably means the economy is really picking up steam. And we're going to get that inevitable inflation that we'll get at some point in time. What we really need to see is not necessarily inflation. What I want to see is wage inflation. That's what will give real confidence for the market going forward.
Well, you mentioned inflation. I mean, now they're talking about deflation with this new report out from Goldman Sachs saying oil could go down to $20 a barrel.
I read that, and if that happens, that would be, you know, a problem for the market because it'll be a debt crisis at that point. Already you've got a lot of oil companies that are really on the edge, and I don't necessarily mean the Exxons and the Chevrons, but there are a lot of companies out there that have revolvers. They're going to roll over in October. If you see oil at $20 a barrel anytime soon, these companies are going out of business.
All right, what stocks do you like right now? What's on your radar?
Oh, you're catching me off guard. I'm actually back into tech. You know, a name we had been in for a while and we left. We're back into Avago. We put that on yesterday. Goodyear Tire is one that's taken a pretty big hit, yet the numbers still look pretty good. We're fortunate, you know, we own Kroger. They seem to have a good report. I'm going to have to go into the numbers on that. I haven't had a chance to look at it.
And you've liked Kroger for quite some time now.
We've owned it on and off for a while. Actually, we sold it for a pretty big profit early in the year. My last time in, I'm probably just getting back to the even line on it right now.
All right, David, we'll leave it there. David Nelson from Belpointe Asset Management, thanks very much for coming in.
Thanks for having me.
I'm Scott Gamm, and you're watching The Street.